Okay, so good afternoon. Welcome back to Trading Strategies. So in the last class, we have discussed about various aspects of technical analysis. We were trying to understand what is technical analysis and all that. Okay, so we have discussed about application on asset types. So we have understood that if we know technical analysis, doing it on one particular asset class, so it can be the same for all the other asset classes. The only thing is we should have the price and volume data. Okay. So next, what is going to be discussing is assumptions in technical analysis. So can anybody tell me what are the various assumptions of technical analysis?
Sir, one of the assumptions in technical analysis is history repeats itself and at any time frame, short term or long term.
Yeah. So history repeat itself is one such assumption. We'll discuss in detail. What is it? Next. Just in case if you know it, because I'm asking you upfront, if you know it, you can tell me the answer. Okay. So in technical analysis, there are various assumptions. Okay, we are going to discuss them. So unlike fundamental analysis, unless technical analysis does not care whether the stock is undervalued or the overvalued. You know that in case of fundamental analysis, what you do is there are two types of valuation methodologies. One is relative valuation, the other one is DCF technique. Okay, so both wants to compute the intrinsic value of the stock, is it not? And the intrinsic value, what you have computed, you'll be comparing that with the current market price. If it is undervalued, you go out and buy. And if it is overvalued, what you do is, if you don't have in your portfolio of investments, you will not sell, you will not do anything. And if you got those stocks in your portfolio of investment, you tend to short them. So this is how it happens in case of fundamental analysis. Okay, overvalued, undervalued is a concept of fundamental analysis, but it is not the concept in technical analysis. Okay, so we normally don't care whether the stock is overvalued, undervalued. Okay, only we are actually going to have a short-term view on the stocks we are going to be analyzing. So we only care about the short-term view of the stock. So because of which we are really not interested in the stock's fundamentals. Okay, so in fact, the only thing that matters in the stock is the past trading data, that is price and the value, and what the information this data can provide about the future movement in the security. Supposing using this particular price and the volume data, if I could predict what lies ahead, okay, so only two things can happen. That is, stock can actually go up or it can go down, or rarely it is going to be on the sideways, or sometimes it is actually going to be on the sideways. Okay, so we'll see the assumptions now. The assumptions in technical analysis. The first one is the price discounts everything. Okay, so what do you mean by price discounts everything? Just in case if anybody knows the answer, you guys can actually tell me the answer. See, none of you are visible. So how should I actually take up this session? I'm really clueless, because how difficult it is to just to speak over the laptop. It is quite difficult for me. Yeah, go ahead. What do you understand by the concept price discounts? Because in the corporate finance too, also somewhere we discussed about this, right? What do you mean by discounting?
Sir, it's like the every news in the market is already discounted in the price level of the share.
Yeah, what do you mean by that?
Like, sir, if the company is acquiring some other company, and that will reflect it in its price. That news, like the company is expanding that.
Yes, yes. Yes,
the price discovery is what an investor wants to pay for that stock. Suppose in case of Vedant's share, there was a case of price discovery by LIC. So though there was a downturn in the price in the market, it was hovering around 76 rupees, but LIC price discovery says that it's worth of 316.
So price discovery is the process you're saying, but what happens is in case of price discounts everything, supposing that you're looking at share price of let's say ITC Limited, it is right now trading at 460. Assume that it is trading at 460. So what does this 460 means? Whatever the information which has already been available in the market, it is already been reflected in the stock price. That is the meaning of the word called, which is actually called as discounted. Okay, supposing tsunami happens, let's say for touch wood, it should never happen. Assuming that if it happens, automatically the stock price will correct, right? then we say that the tsunami, what is actually, it's a natural calamity, and nobody would want it to happen, right? So if that happens, then what happens is the stock prices are actually going to be crashing because of the fear factor, because of the fear factor. Okay, right now you are looking at the index, and the index is down by, let's say, 15%. So what does it mean is whatever the information, what the tsunami you are actually looking at, so that is already been discounted in the stock price or the index value as such. Okay, reflecting the current information in the index or the stock is actually called as what? The discounting process it is. Okay, so it does not mean that stock is available for some discount sale. Okay, so don't think that way it is. Okay, hope everybody understands what is price, discounts, everything. Whatever it is, it's a good news, bad news, or whatever the news it is. Okay, which with respect to company, economy, or maybe industry for that matter, everything else will be get reflected in the stock price. What is the good news? So good news for us is what company is earning. This quarter earnings of the company is actually going to be very high. Okay, this is a good news. So the moment you know that this is a good news, you can see that some stock price is actually going to be getting adjusted for that information already. What is bad news? Let's say, for example, some developments have happened in the company. The CEO of the company is a fraud. Okay, and some charges have been booked against the company CEO, which is very bad news. What happens? Automatically, the stock price will reflect to the extent of that news. So that is what exactly happened with respect to Adani also. So when the Hindenburg released the report, so the stock price have been got reflected to the extent of that news, right? So that is actually called as for discounting the news. It is okay. So next comes the so this is one of the assumptions of the technical analysis. The price discounts everything. That is the priormost assumption in the technical analysis. And the next one is the history repeats itself over time. So what do you mean by history repeating itself with respect to technical analysis? Arpan, what do you mean by that?
Sir, it means that in which pattern the price has moved previously, the same pattern the price will follow in the current time.
Okay, so that is actually called as what the history repeating itself. Anybody else?
Yes, sir.
Anybody else would like to say what is this history repeating itself with respect to technical analysis? Do you know some of the patterns in the chart, like head and shoulder pattern, or maybe double top, triple top, which we'll be discussing the days to come. So if you have seen that there is going to be double top or triple bottom or whatsoever it is the pattern, they tend to repeat themselves in the days to come. Getting it what I'm saying? So that is actually called as what history repeating itself. Yeah. So anybody else would like to say what is this history repeats itself over time?
Sir, it is generally the psychology of the traders generally shown in this history.
What is that psychology?
Psychology means the structure, patterns, reoccurrence of those patterns.
Okay. So if it is a positive news, if it is coming in the market, do you feel that the markets will infinitely go up and up and up? Is it so? It is going to halt after some time, and then it might correct. Correction means if the markets have been trending upwards, correction happens means the stock prices will come down. That is actually called as what correction. Okay, so correction will happen, and then it will halt. It will consolidate for a while. What do you mean by consolidation in the stock prices? It is actually going to take a sideways for a while, and then it might actually move up, or it may be again go down. Okay, so there is a pattern in the stock prices.
Sir, will correction happen in upward direction also?
Correction happens in the correction is normally
For example,
coming
in
down.
COVID, yeah. For example, when in COVID times, when the market was continuously falling, at that time, after some times, the market started going up.
Yes, yes.
So will it also called? Can we call it as correction also?
No. It is actually called as trending upward direction. It is. Correction is normally used as a word for stocks to fall. Market to correct means it will come down.
Okay, sir, got it.
Okay. So where were we? So history, there is going to be a sort of trend which you're actually going to be seeing in the stock prices that tend to repeat over a period in time. So if there is some crisis has happened, let's say for example 2008 global financial crisis, stocks must have moved in some fashion, index must have moved in some fashion. And there is one more crisis which has come up during 2019 2020 when the lockdown has been imposed because of the pandemic. That is also going to be a crisis. Okay, so a similar set of what is that tendencies can be seen in the stock prices. Okay, and the whole of this is actually called as what history tend to repeat itself. So whatever has happened in the past, okay, it is about to happen in the future also. That is actually, it is actually called as history tend to repeat itself. Yes, Chahal, can you please go ahead?
Sir, during the end of financial year, everyone like tries to book their losses. Will it come under the history repeating itself part?
Yeah, we have to check in these charts. If the charts are actually going to be displaying the same set of emotions, then we say that history repeat itself. We'll discuss in greater length in the days to come because the whole of the assumptions what we are actually discussing here will be part of your everyday picture of your technical analysis. Okay, we tend to repeat the same in the days to come as well in all the sessions which we actually take it up. That is history repeat itself. Okay, when we discuss the pattern, you will understand what is it in a greater depth. Okay, so next comes the price moves. Just a second. The price moves in trend. So what do you mean by price moving in trend? Means you know that there is an uptrend and the downtrend. Okay, so infinitely prices will not really move the way it is actually saying. Just a minute, I'll share this to you. Is this visible?
Yes, sir.
Yes, sir.
So I have not used this pad at least for more than a year now. So I'm trying to use it now. Okay. So going up, correcting and going up like this, correction, going up, coming down. Coming down is a correction for us and goes up. So you can see it is making this is low. I think I'll take up the better pen. Okay. So this is actually what these are the lows. These are the lows. And as you know, these are the highs. Market is making highs. In other words, market is making higher highs. Why it is called as higher high? Because when compared to this high, this is higher high. When compared to this high, this is an higher high. When compared to this high, this is one more higher high, is it not? And also it is making lower lows, higher lows. You can see this when compared to this low, this is a lower low. This is a low, but higher than this low, right? So higher highs and higher lows. It is actually called as higher highs and higher lows. So when there is a market is making higher highs and higher lows, then we can say that the market is actually uptrend. So market is uptrend. Okay. In case of market correction, what happens? So market will go up for a while and then it corrects and then it bounces back and again comes down and again it goes up and again comes down and again it goes up. Okay. So this is what, again, this is low. This is low. And this is also high. This is high. So every time what the market is making is here the higher lows. Okay, lows are actually higher lows and the lower lows. It is when market is making higher lows and the lower lows, then we call it as what? Market is making a downtrend. When the market is making a uptrend, what is going to be happening? In case of uptrend, what happens? What I told you is market is making higher highs and higher lows. And it is not the case with the falling market. The falling market, what you can actually see is higher lows and the lower lows can be seen. Okay, what I'm trying to say here is, okay, so the prices moves in the trends means it will not go like this. If the market is going, it will not go like this, right? Upwards, it will not go. It will not go, keep on going high, it will not go. So it goes up, okay, and then goes down. There is a correction which can be seen and then it goes up and there is going to be correction that can be seen. Okay, which means there is going to be a trend. Okay, so prices moves in the trends means in this fashion the price will move. It will not move in this particular direction. That is what you have to understand. This will not happen. Okay, only it happens in case of a spurt, a sudden very good news has come up and it will go and then it will halt. It infinitely it will not go up or infinitely it will not go down like this. If it is going down, it is going to be making like this a correction which just if it is going up, it keeps on going up this fashion. Is it not? You have seen it. You have been seeing this. Is it not? It is not that it just goes like this upside. There is going to be corrections which is actually going to be happening, and then it is actually going to be moving upward direction. So that is why it is called as what? The prices moves in the trend. There is a trend that can be seen. Okay, and if there is no trend also, what happens is assume that this is the stock movement. Okay, you can see the moment it touches some certain particular levels, again it goes down, and again it is going to hit top, and then it is going to be coming down. If it happens like this zigzag way, then it is called as what? Market is consolidating, we say. It is also called as what? It is also called as what? The market is in the range bound. So understood what is consolidation market. This is actually called as what? Consolidate. Market is consolidating. So this is actually called as the markets are consolidating. Okay, this is market consolidating. Okay, it is not going upward or it is not going to go downward. It is going to take a sideways. So these are the assumptions of the technical analysis. We'll be coming back and we'll be reviewing in the each and every session also, because when we discuss about history repeat itself, technical analysis is all about that itself. Okay, so during 6 hours and 15 minutes, because market opens at 9:15 and it ends at 3:30, so there is a duration of 6 hours and 15 minutes market session. There are millions of trades that takes place, as you know, right? So millions of trades takes place. Supposing if it's Reliance Industries Limited, how many times the stock prices must have gone up or gone down? Okay, so many times, in other words, millions of trades happens. Okay, so think about an individual stock. Every minute there is a trade that gets executed on the exchange. Every microsecond there is going to be the trade is going to be getting executed. The question is, as market participants, do we need to keep track of all the different price points at which the trade is executed? Is it really possible to track all the prices? It is impossible, is it not? So a million times which price point you're actually going to be looking at. Obviously, we should be tracking at least the 4. Okay, so it will be practically impossible to track all these different price points. In fact, what one needs to need is a summary of the trading action. We require a summary of the trading action. So what is the summary of the trading action is? See, supposing that this is what is these are the prices at which the shares have, the particular share has been got traded. Okay, so what is important for us is this is the open price and this is the close price. We know this. And what is the high price? This may be high price and this may be low price. Okay. Only 4 points which are actually important for us in those particular price points what we have just now discussed. So in other words, what we require okay, OHLC. So we have discussed some part of it in the in your trading strategy, sorry, financial, the corporate finance also. So what is important for us is OHLC strategy. Okay, so O stands for what? Opening price, high price, low price, and the close price. So these are actually going to be helpful for us, and these are part of our technical analysis. Okay, so here what we have did is what is this open price? When the market opens for the trading, the first price at which the trade executed is actually called as what? The opening price. Okay, so high prices, the day is high, day is low, you know it, the price at which the stock has actually made low is actually called as low price it is. Next, the close is what it is. The close price is the most important price because it is a final price at which the market closed for the particular period of time. This is the price at which the market has been got closed for the day. The close serves as indicator for the intraday strength. Okay, normally what we do is we take into consideration of close price because emotionally or sentimentally, psychologically, that is what is the price at which market participants have actually closed the day. Okay, so because of which it has got its own significance. Okay. If the close is higher than the open, then it is considered as the positive day, else it's going to be negative day. Okay, what I'm trying to say here is supposing that markets have been started off. Okay, so Nifty, Bank Nifty has started off, let's say, for example, at 44,000. Okay, it has opened at 44,000 levels and it has closed. Today it has closed at 44.5K. So what is the meaning of this is 44,000 points market has opened, that is Bank Nifty I'm saying, and it has closed at 44,500. Okay, so this is the close. So which means today we can say that it's a bullish day because the market has actually gone up by 500 points. Is it not? So 500 points the markets have gone up, and because of which by looking at the close, of course we require opening price as well. By looking at open and close, we say that the day is actually a positive day. That is why there is a significance of closing it is. That is why there is going to be significance of the closing which comes up. Okay, if the close is higher than the open, then it is considered as a positive day. Otherwise, what if from 44,000, if it has come down to 43,000 Bank Nifty, then we would have told that it is the negative day because 1,000 points the Bank Nifty has collapsed. Okay, it's considered as a bearish day. So the closing price also shows the market sentiment and serves as a reference point for the next trading day. Okay, so today's close also, the various technical analysts, what they do is, by taking into consideration of today's close, they would like to predict, okay, what is going to be there for the next day. So tomorrow morning, whether it is going to be, what price it is actually going to be opening, whether it is going to be positive day or negative day, they would like to assess. Okay. So OHLC prices have to be plotted on the chart and should be analyzed. Okay, so that is why not all the price points are really important for all of us. It is only the OHLC point, that is the open high close price, high low prices are actually going to be important for us. Okay, so as I told you, this is open, high, close, and this is low. OHLC is very important for us. Okay. So what are the various chart types we have for that matter in case of technical analysis? Having recognized that OHLC serves as the best way to summarize the trading action for the given time period, we need a charting technique that displays this information in the most comprehensive way. So OHLC should be now displayed. So which particular chart is actually going to be helpful for us? So there are various different charts which are available, and since some of you already know about trading and all, so you know that Japanese candlesticks, you must be using it, right? So each trading day has a 4 data points, that is OHLC. So if we are looking at 10-day chart, so we need to visualize 40 data points. Okay, because OHLC means there are 4 data points in a day. So 10 days means 4 multiplied by 10, it is going to be 40 data points we require. So that is what is the length we should be looking at. So you can imagine how complex it could be to visualize 6 months data, okay, or maybe years data for that matter. Okay, for 10 days itself, there are 40 data points. Okay, for 6 months or 1 year. Okay, so how many data points it is required? You have understood now roughly. So the regular charts that we are generally use are the column chart, pie chart, area chart. We normally use it. You must have learned in statistics, QT. Okay, but does not work for the technical analysis. For our analysis, this particular chart will not be helpful. However, the line chart will be helpful. Okay, the line chart is actually going to be helpful because we are going to be joining the closing prices of each day, and we wanted to see the trend of it. So line chart may be helpful in that way. So the regular charts don't work mainly because they display one data point at a given point in time. So we don't want that particular visualization. We want all the 4 points also be equally visible. For that matter, we'll be having the various charts like this: the line chart, bar chart, and the Japanese candlestick. So what I do is I'll just go to this. Okay, so we can see this chart now. I'll just put ITC Limited. Okay, so this is ITC Limited chart it is. Okay, so if you want to look at the line chart, what you have to do is, so go here, there is a candles out here, right? So click on it, and then you can actually go for the line chart. So you can see this is the line which is really visible, and this is actually called as what, line chart. So in this case, what it does is it just takes into consideration of the closing prices. Okay, so I'll make it as a day chart it is. So this is a daily chart it is. You can see here. So at any point in time, at what price the ITC have been closed, if you want to know, that is 17th November 2022. Okay, at what price it has actually closed, if you want to know, is 343, you can see. Okay, so what is the price point out here is, it is 431. You can see here the prices are changing here, this one. Okay. So that is how we will be looking at the line chart. So line chart is also equally important for us. Supposing if you don't want to have a candlestick or maybe a bar chart, if it is confusing at one point in time, if it is confusing, if you want to come back to this kind of a chart, you can actually do it. So line charts also equally important in technical analysis. So next comes the bar chart it is. So you can see these are the bars it is. So I'll just maximize this. Okay. So there is one right tick and there is one left tick here, and the whole of the body is represented by green or maybe red for that matter. If it is green, then we call it as it's a bullish candle or a bullish bar chart it is, or it is actually going to be what it is, bearish bar it is, bearish bar, and this is the bullish bar. You can see this is the long bullish bar it is, and this is the long bearish bar it is. You can see this is the bar. Okay, so this is the long bearish bar it is. So hope you have understood what is this. So it is quite difficult to visualize this particular bar chart, because this is going to be close and this is going to be open, and this is the high price and this is the low price. Okay, so we are going to be depicting all the OHLC here in the bar chart as well. So what we do now is we'll go to the candlestick chart it is. So normally we use a candlestick chart it is. So this is how the candlestick chart comes up here. You can change whatever the chart you would like to go for it. So normally it is going to be in Western, in America, I have seen people using bar chart. And in case of India and Asian countries, I have seen that people are using the candlestick chart. And also we use the line chart as well. Okay, so you can go to tradingview.com as well. You can actually go to tradingview.com simultaneously, and you can actually look at the price. You can actually do what I'm actually doing it here. Go to ITC Limited. Okay, so you can change this bar candle to bar chart, line chart. Okay, and you can experiment all of this. Okay, so what we really require here is the line chart or the bar chart or the candlestick chart. Okay, so we have discussed all of them now. Okay, so these are the various charts we'll be using. So what I use in trading strategies is I am fond of Japanese candlestick, because I've been using the Japanese candlestick for the last 10 plus years now, and because of which I'll be using Japanese candlestick. So if you're interested, you can also use bar chart. But normally what I've seen is Japanese candlestick charts are actually quite visually appealing, and because of which we normally tend to use the Japanese candlestick. Okay. So let us see bar chart it is. What is this bar chart is? You can see here, you can take some time and try to understand what is the chart we are actually looked at just now. So take some time and see what is closed and what is open. The right tick is actually closed and the left tick is open. High prices, you know what is high price and the low price. Okay, so just visualize it for a while. Yeah, so this is how the bar chart looks like, and we have understood the interpretation of this as well. Then let us go to the Japanese candlestick. So as the name suggests, the candlesticks originated from Japan. That is why it is called as Japanese candlestick chart. The earliest use of candlesticks dates back to the 18th century by a Japanese rice merchant named Homa. Okay, so he's the person who has actually maybe used it for the first time also. Though the candlesticks have been in existence for a long time in Japan and are probably the oldest form of price analysis, the Western world traders were clueless about this analysis. Okay, the Steve Nyson was the trader who accidentally started using the candlesticks in 1980s, and he introduced the methodology of rest of the world this particular technique. So he wrote the first book on candlestick titled Japanese Candlestick Charting Technique, which is still the favorite amongst many traders. Most of the chart pattern in candlestick has Japanese names. Okay, so you must have heard about doji candle, or you must have heard about something like the harami candle for that matter, or you must have heard something called as engulfing, bullish engulfing. So these are the various words that comes up there. Okay, so in a candlestick, the open close prices are displayed by a rectangular body. It is, so we have seen the rectangular body, right? So this is actually Japanese candlestick. Okay, so this looks like a candle, so that is why we normally call it as candlestick. Okay, rectangular body you can see here, right? So in a candlestick chart, the candles can be classified as a bullish or a bearish candle. As I told you, this is the bearish candle, this is the red candle, and this is the bullish candle. It is. So I'll just make it weekly. So however, colors can be customized to any color of your choice in a software. Okay, it can be turned into black and white as well, because in some of the pictures we have seen that black candle, the white candle. So white candle signifies a bullish candle, and the black candle signifies the bearish one. So let us see the rules now. So close is greater than the open, then green candle comes up there. Okay, if the close is higher than the close is greater than the open, then green candle will come up. If it is the opposite, then red candle it is. If the exactly open is equal to close, and then what we can actually see is there is no body as such. It is just a dash mark that comes up here. Okay, so bar chart and the candlestick chart, if you would like to see side by side. Okay, so you can see the candlesticks are visually more appealing. Okay, so this is becomes quite cumbersome if you want to look at, let's say, a 6 months data or 1 year's data. So all the bar chart, you feel like they're actually overlapping to each other. Okay, but candlestick still you can actually make out something out of it. Okay, that is why because of the visual appearance, I would like to use a candlestick in my chart, candlestick charts in my classes. Okay, so next comes this is the high price. Okay, this is actually called as what? This is the body of the candle, and these two dashes, what you are seeing, the black one, these are actually called as wicks, are also called as shoulders. Okay, wicks. So the top wick signifies the high point. Okay, and the lower wick represents the lower point. It is. So when close is higher than the open, the body is green. If it is vice versa, if open is greater than the close, then that signifies the red body. It is. So in other words, the red candle is a bearish candle, and the green candle or the white candle is actually bullish candle. It is. Okay. So can you draw this? And can you actually draw the candlesticks on your own now? So what I do is I'll just take this up and I move to the yeah. So now we have all this. Let us go to the first one, day one. Let us draw this. So can you also draw along with me? Okay, first of all, we have to see whether to take which pen it is. Okay, so which pen I am supposed to be taking it, I should be deciding. If the close is greater than the open, then I choose the green candle. Okay, so 438 versus 430. So 438 is higher. So I should choose the green candle to write. Okay, so what is the open price here? The open price is 430. So I'll write the open price first of all. So the open price is 430. I'll write it here, 430. Okay, so high is 444. So it has made a high of 444, and it is also made a low of how much? 425. So low is 425, and it closed at 438. Closed at 438. Okay, so if I have to draw a candle based on this information, so how should I be writing it? So I'll just write this candle. Yes, Mr. Saib. Yeah, sorry. So what I do is I'll just make it as a green candle. Okay, so I'm just writing this as this. So it has made a high of 444, and it has closed at 438, and the open is 430, and the low is 425. So which means this point signifies to 425, and this is the point that is 430 is the open price, and this is the point which signifies the close price, and this is the point which signifies the high price. Okay, so we have actually drawn this based on the day one. So can you draw day two now in your notebook? Okay, if it is a red candle, okay, then make it as what? Make it as black. If you're using black pen, fill it up something, then it is going to be black at us. And if it is going to be green candle, how are you going to do this? So green means it should be white. Don't fill it up. The body should not be filled up. Okay, so you solve for day 2 and day 3, and let me see how we have actually drawn it. I know for few of you this may be a very slow session because there are many students who don't know all this for the first time. They must be listening, or they must be knowing it for the first time. So they may be curious in understanding what we are trying to say here in the class. So because of which maybe for the first 2 sessions it will be very slow. So later on it is going to pick up its traction. Okay.
Sir, can you please show us the data points again?
Yeah, sure. Is it visible?
Yes, sir, it is visible.
Okay. So day 2 and day 3, do it for yourself.
Done, sir.
Done?
Yes,
Okay.
sir.
How many? Just raise your hands if you are doing. Apart from Roshan, who else have done? Just raise your hands so that I'll understand. Okay, Harshit, Kavit, Afridi, Sai Manish, Preetam, Aritri is doing, Yadu Krishna is doing, Harsh, Pooja, Sauradatta, Anag is doing, Siddhartha is doing, Arpan is doing. Okay. Hemant is doing, Aditya Pratap, yes. So good. So at least some of you are doing other, I don't know what others are doing. Okay, so let us now discuss the one, because I am unable to see what you have actually done. In the classroom means I would have actually taken around. Okay, I would have actually done that way. So fine. So the second one, let us see the second one. So tell me second one, whether it's a red candle or a green candle.
Sir, red. Sorry, sir, green.
Green candle, right? So it's a green candle. Let us actually do it now. So I'll write it from the green only now. Okay, so time. So what is the open price? Open price is 445, right? So I'll write it as open.
So could you please repeat the part of black and white candle?
Pardon?
The black and white candle.
So black means it is a red candle. White means it's a green candle. That's it. Is it fine?
Okay.
Okay. So now the high price is 445. So I'll write H as height. It is 445. Sorry, it is 455. It is. So 455 I wrote here. And 438 is my low. It is. So I write here low as 438. And the close is 458 is. So close will come between H and L, right? H and O it is. So close is 458 is. So I can easily represent this. So I take up this. Okay, so this is the green candle. What is it we have actually looked up? So day 3, can you tell me what is the kind of a candle?
Sir, red candle.
Red, sir.
Candle, sir.
It is red candle, because you can see the open is 445 and the close is 437 it is. So obviously the close is actually lesser than the open price. So I'll draw here the directly I draw the red candle here. So I'll represent now. So the low is 430. This is 430. And the high is how much? High is 455 it is. So I'll write high is 455. So it is 455 and the open is 445. So this is open for me 445. And the close is 437. Okay, so this is the red candle. Fine. So we have understood how to draw it. Supposing if I show you the candle, the candlestick, so will you able to tell me how the day was? Okay. So I'll show you some of the candles now. So please please listen to me now. So can you tell me this particular candle? So this is on 15th of May 2023. Can you see this candle on the screen? That is ITC candle, 1 week's candle. It's a weekly candle. How many of can you see this candle?
Sir, it consolidated on that week.
Sideways, sir.
You can see this is the weekly candle. It is okay. This one. You can see this is the red candle and this is the green candle, and between them there is a candle. It is. You can see the body of the candle is very minimal. It is something like a dash. It is. Okay, what must have happened in that week? Can you tell me? Can anybody will narrate?
So open and closed price are very close to each other.
Okay, so weekly open and weekly close, because it's a weekly chart. It is. You can see what is the data points of this can be seen here. OHLC, can you see here? OHLC, can you see here? So if I place this particular cursor on this particular week, automatically you can see open is 420, H is 432.45. How much is low?
411.35.
411.
Yes, very good. C is how much? Close is how much?
Over 9.85.
Okay, so what is the difference between open and close there? Can you see me? The first price and the last price?
0.15.
Yes, a 0.18.
It is only 15
0.15.
paise, right? 15 paise,
Yeah.
in other words, it's only 15 paise it is. So because of which you can see the whole of the week, okay, some consolidation has happened. Okay, ultimately what has happened, the market closed exactly where it has opened. So that is why there is no body at all here. However, in the week, the stock has gone up to 432.45 as well, which is high. And it also went as low as, in fact, how much it is. It went down to even to the extent of 411.35. Ultimately, it has actually closed at 419.85. So if I look at this whole this particular candle, I should be able to tell what has happened in whole of the week. Okay, so similarly, can you tell me a story for this green candle? I have exactly placed this on the green candle. What has happened in that week?
A bull run.
It is a bull run, right? Why it is called as a bull run? Why we are calling it as a bull run?
Because the closing price is greater than opening price.
Yes, the closing price is actually 443, and when compared to when compared to the open price, how much is this? Open price is 421, but it has made closed at 443, almost 20 rupees difference it is, and that is why you are actually seeing a long, big candle. It is. So you are actually seeing a big candle. It is. Okay, so we can actually say a story like this, is it not? By looking at each candle, what we are actually looking at, right? So I want to now, can you tell me a story of this candle now? This one. We can see there are two small green candles. In between, there is a red candle. Tell me the story of the red candle.
So this is in a range, sir.
It is in the range, it is. So the stock has really not moved up because the body is very less, it is, right? Close and the low price, close and the the open prices are not really much, which means there is no much activity which took place in the market. It was just a range bound. It is within the range of that only the market has actually gone up. And it also, you can see the low price and the open price are the same. It is open price or the closed price. The close and the low are the same. Is it not? Okay, so that is how, that is what we can actually look at this. And can you tell me this green candle? There is some activity which has happened. Market went down like anything. You can see it has made a low of 329 in that particular week. What has happened? Again, it went up, and it has actually now went up, and it has closed up at what price? It has closed up at what price it is? It has closed at almost 380 rupees in that week. Okay, so big body at the same time, the big wick. Okay, big wick means there is some activity which has taken place. Either it moved up or moved on very low as such. That is why you can see a very big wick which is actually formed. Okay, so looking at the candles, now we should be able to tell a story. So what you have to do after the classes, go open any chart as such, and you should be able to tell a story for yourself. Okay, so why this particular chart has moved like this? You should be able to tell a story to yourself. Okay, so that is what is the exercise you should be doing after the class. So since you have understood this, I'm going back to the PPT. Okay, so next is a long bodied candle depicts a strong buying or selling activity. Long body, that we have actually seen it, we have discussed that. A short body candle depicts a less trading activity. Short body means very less trading range, that we have also understood. So candlesticks helps you to quickly visualize the relationship between the open and the close, as well as the high and the low price points. It is in one particular candle, you should be able to visualize 1 month or maybe 1 week, or what has happened in whole of the day. Okay, so hence many use candlestick chart ahead of the bar chart. We have discussed that. So different time frames we should be looking at now. Okay, a time frame is defined as the time duration during which one chooses to study a particular chart. It is okay. So what I do is I'll just go to again trading view. Just yeah. Okay, so I'll change this to now candles. Hope this is visible, everybody. Yeah. So okay. So can you tell me what is this time frame it is? What is the time frame you're looking at?
Daily.
Daily, sir.
Okay, some of you must have confused, sir, how we know whether it is a daily or weekly. You can see here there is a D written here. Okay, so if I place my cursor on it, it is showing 1 day it is, which means it is the end of the day candle it is, which means a daily candle it is. Okay, so each candle represents 1 day it is. Okay, so I can actually choose to change the time frame as well. So I can actually go for a week's candle now. So just a minute, what I do is I'll just collapse this. I go to week now. So whatever the candle you are looking at right now is W. As you can see, it is week now. So because of which one candle depicts 1 week it is. It is as simple as such it is. Okay. Supposing if I want to go for a month, then I click on the month now. So whatever the candle you are looking at is one candle represent what the trading activity which has happened in 1 month it is. So we can see ITC, what has happened? Can you count the candle? 1, 2, 3, 4, 5, 6. Sixth candle, 6th week it is. It is actually uptrend it is. Okay, which means it's all the bullish candle you can actually see in for the last how many months it is 1 to 6 months. ITC stock is actually going up like anything, and it is actually having an uptrend. Okay, monthly candle. So next comes 12 months. Okay, so 12 months is equal to 1 year, is it now? So you know it is 1 year it is. So one candle represents 1 year it is. So what the one candle you are looking at here is, it is the 1 yearly candle. So which means 1, 2, 3, last 3 years, ITC is continuously up. It is bullish. However, previous 3 to 3 years, you can see it was actually bearish. Okay, so it is an yearly chart of the ITC. It is. Hope you have understood what is time frame now. So tell me, what do you understand by time frame, class? What do you mean by time frames?
The
Time
movement
frame.
of a stock at that particular time. For example, a weekly, monthly.
Yes. So daily, weekly, monthly, we have seen, yearly also we have seen. So can we also have a lower time frame? Is it possible to have a lower time frame?
Yes, sir.
Yes,
Yeah.
sir.
So instead of days, what I want to do now is I would like to go for hourly now. I want to see how the ITC has performed not on a yearly time frame, but for the hourly time frame. Okay. So what has happened here? Can you tell me what has happened for hourly time frame for ITC? Why it is showing like this?
The movement in the price is very small.
No, it is not small.
Sir, there is no close and open prices here.
No. They are there, but it is not visible to you. I'm telling you. For example, you can see this candle, right? I am placing my cursor on it. Can you tell me how much is the difference between close and open?
3 rupees.
3 rupees. Is it not? What is the difference between high and the low? 448 is high. Okay. And the low is 444. There's a difference of 4 rupees and 75 paise, right? It is not been really depicted here. Don't be confused. Only thing is we have to readjust the graph here, the chart here. You can see I just do here like this. Okay. You can see now it is going up. Means I am actually zooming it. Is it clear now? Okay. So this is a hourly chart. It is. This is the hourly chart. Okay. Earlier, how was it? It was like this. That is why you are unable to see the price fluctuations. So what I did is I slightly modified the way I want to visualize the chart. Okay, so you should be knowing this as a trading studies student. This is the very important the graph, the charting technique. It is not a technique as such. It's the basics of the chart. It is, you should be knowing, okay, how to do this. So many I know many of the students were not knowing how to do this. They sometimes come to me, sir, the chart is, we are unable to see it in one one go, it is different than what you're actually looking at. So you can see this is also chart, right? You cannot really visualize it in one page. If you want to visualize it in a single page, what you have to do is you have to do this way. Okay, you can visualize neatly in one page. Always you should do this whenever you actually change the time frame. Okay. So now, so what is this hourly time frame here is what has happened to the ITC stock for the last 1 year? Sorry, the last 1 hour. You can actually visualize looking at this particular candles now. Okay, so if I don't want to go for hourly, I want to go for a higher time frame, then I can go for the 2 hourly chart. It is similarly I go for the 4 hourly chart. Okay, so if I'm actually looking at a forex, supposing if I'm a forex trader, okay, if I'm a forex trader, how do I do it is I'll just go here. You can see I go for the forex Euro USD. I'll just put Euro USD for that matter. Okay, so for the forex, normally it is what is normally used here is 4 hours. Okay, so if you're a forex trader, your time frame will be 4 hours. You may be interested in 4 hourly chart. It is okay. So 4 hourly instead of 1 hour, they actually look at the 4 hourly chart. So why is that they are doing it? Because they must be comfortable that way. Okay, so if you ask me which is the time frame I will be using for the stocks, 4 hourly will not make any sense for me. So I'll go for a I would like to go for a minutely chart because I'm an intraday trader. Okay, so because of which I would like to see at what has happened in the 15-minute chart. It is. Hope it is clear what is time frame chart it is. So time frames means I want to change my scenario, my outlook for minutely to hourly to daily to weekly or monthly. If I'm changing my time frames like this, then this is actually what changing the time frames. So why I actually change my time frames like this? Why should I change my time frames like this? And which is the best time frame for me to invest or trade? What is the answer for this? Yes, Edu Krishna, you have raised your hand. Go ahead.
Nothing, sir. It was by mistake.
Yeah, fine. So tell me, what is the importance of this time frames? Is time frames is really important, or we have to just keep it at 5 minutes, or we have to just keep it at 15 minutes, or we have to just keep it at weekly all the time?
So time frame is important because it can create a bias for our trade. Let's say if I am bearish on that day, so
Okay.
I'll keep an 1 hour time frame or a 15-minute time frame to
Mm-hmm.
see that bearish momentum.
Okay, so the question what I asked is very elaborated answer. What is it I actually asked you? And I have not even answered to that question as of now. So because there are many things to understand before that. Okay, so some of the popular time frames that technical analysts use are monthly, weekly, daily. We have seen all this now. Okay. Also, we can customize the time frames as per our requirement as well. We know that. So, for example, a high frequency trader may want to use a 5-minute or maybe a 1-minute chart as opposed to any other time frame. Okay, supposing if I'm an intraday trader, so I'll be having 2 outlooks with me. Okay, so I can just show you if I'm an intraday trader. Okay, so what I'll do now is I'm an intraday trader now. Okay, so this is my bank Nifty, it is index, it is, and here it is. I'm looking at the options. It is here the bank Nifty. I've kept it at 15 minutes. Okay, so this is the index. It is. Okay, market still not ended. Now it is ended. Okay, so we can see here it is a 15-minute chart. It is. And here I have kept it at 5 minutes. What is it? Bank Nifty options. It is. Options means it's a put option. We'll discuss. You have not discussed what is put option or whatsoever it is. So I'll be having 2 different windows in the TradingView platform. I would like to see on a broader way how my index is moving. At the same time, I would like to trade on the Bank Nifty on a 5-minutely basis. I can even I can actually make it 2 minutes or 1 minute also, but I am comfortable with 5 minutes, so I just kept it at 5 minutes. So it is actually the traders or the investors' choice about the time frames. It is okay. So based on the 15-minutely chart, I would like to trade something on my options. Okay, so because of which I kept it at 5 minutes, because each and every movement is also very important, because my money is involved here on an intraday basis. Okay, so each and every point is very important for me. So every 10 points will make a huge difference, right? Every 50 points will make even more difference. It is. So because of which my viewpoint is only how much? 5 minutes I've kept it here. Supposing I'm not an intraday trader, but I am an investor. So I damn care about this and I just go here and I put it for an, what is it? Even I'll not be worried about hourly what is happening. I just go keep it here on a weekly basis, what has been happening. Getting it what I'm saying? So as and when from the intraday trader, if I'm going to move towards investing, then what happens is my time frame becomes what slightly larger it is. So weekly will be much higher than the 4 hourly, right? So obviously, if I'm if my time horizon, let's say for example, 3 months is my time horizon in case of any stock for that matter, I may be looking at a weekly chart or maybe I'll be looking at the daily chart for that matter. I hope it is clear. So it is a time frame which I'll be choosing based on my preference. It is okay. So that we will discuss in a later stage. But you have to understand that there are some different time frames in the chart. That is, if you understand that much at this point in time, that is sufficient. Okay. So next comes what is this monthly, weekly, and daily? We have discussed this. Monthly means what is open price of monthly? It is the opening price on the first day of the month is opening price. It is. What is the close? The close price of the last day of the month is actually called as what? The close price it is. And high and low, you know it. In that month, how much the price has gone up, how much the price has gone down, that is low it is. Okay, so but I'm interested in 5 minutes, what happens? Okay. The opening price at the beginning of the first minute is my opening price. It is. What is my closing price? The closing price on the 5th minute, at the end of 5th minute is actually going to be my 5-minutely closing price. It is. Okay. And high and low, you know what is it? And there are 75 candles which will be there in a day. Okay. So 6 hours, 15 minutes will be divided by 5 minutes each, which will be 75 candles as such. So okay, if you are looking at a 15-minutely chart, then you'll be having 25 candles per day and so on. Okay. So which time frame? I asked you a question already. So based on the type of trader you are, you need to take a stand on the time frame you need to watch out for. The data can either be information or noise. As a trader, you need to filter information from noise, right? For instance, a long-term investor is better off looking at a weekly or a monthly chart, as I already told you. So while on the other hand, the intraday trader may be interested in executing 2 trades per day, is better off looking at the 5 minutes or maybe 15 minutes chart, which I already showed you with respect to Bank Nifty. Okay, so if you have understood this much, then we are going for the price action. So any doubts so far what we have discussed, you can ask me now. Otherwise, we will go to the next point of discussion. Yeah, so I'll ask you a few questions now. So what do you understand by a bullish day?
When days closes higher than days open.
Okay, so which means it's an green candle day, right? So what do you understand by a small body? What do you understand by a small body of the candle? Supposing if you're looking at the weekly candle and the body is only very small. So what do you understand by
less
that?
trading activity. Trading activity was very less.
Yes. So the trading activity means that it is a range bound market. In other words, it is a range bound market. It is a market was consolidating in one's narrow range. Okay. So that is actually called as body. It is. What if you have got a huge VIX? What is the meaning?
Volatile.
Market is more volatile, which means the market has actually gone up like anything, gone down like anything. That is why there is a huge VIX as such. Okay. So supposing that there is something called as this. Let me write it down for you. How do you interpret this? The body of the candle is looking like this only. What is the meaning of this? How do you interpret this candle? Supposing it's a daily candle.
So market was quite volatile, but opening and closing prices were nearly same. Not much difference.
There is no much difference between the closing and the opening price. And then what you can actually interpret?
So the
But
closing
Sir,
happened.
opening
actually,
price
There
is more
is
than the
bull
closing
pair,
price.
Yeah,
That
bull
is
Mohsin, go
market.
ahead.
players wants to up the price, but the bull players one wants to up the price, but they are not possible. They are not successful in that.
Correct, because it's a
So
red
market,
candle, it is.
yes,
strength of like buyers is less.
Strength of the beers are more, in other words, right?
yes.
Yeah, so you can see the low price is the same, open price is the same, close price is the same, but what has happened? It has made a high. For some time it went up and then it came down, is it not? So now we can actually tell a story out of this, right? So assuming that this is the one more candle now, something like a T. Okay, so I'll just put something like this instead of T. I'll make it slightly more. Some body is there instead of that. There is some body. Assume that there is some body to this. So can you interpret this candle?
So after opening, market went down drastically, and then again it went up and closed at higher than the opening price.
Okay, so it looks like a hammer, right?
Yes.
It is looking like a hammer. So hammer has got its own significance. So we'll discuss in the next session as such. Okay. Okay. So this is all I have to say regarding this. So let me go to the next one. Okay. So the trading strategies based on the price action. So what do you understand by price action? Just in case if you know what is price action. Just a minute. Somebody is coming. I'll mute him. Yeah, sorry. So tell me what you understand by price action. Anybody know what you understand by price action?
Taking decisions based on the trend patterns, observed patterns.
Yeah, anybody else would like to guess this? Pooja?
So it's like the prices which have been like the strong impact on the stock price. Like there is like strong base for the price that we can predict that the price will not go below this and the price will not. There's like strong resistance and strong base for the prices, like which is developed over a long period of time.
Okay. Yes, Aditya?
So price actions, it helps us to look into the resistance as well as supports, and also we can find out when there's breakout or breakdown.
Okay. So fine. So these are some of the answers. We'll see what exactly is price action trading because for the next 2 to 3 session or more than that, we'll be discussing about the price action trading itself. Okay. So we'll see what is it now. Okay. So price action through a candlestick pattern it is. So through candlestick pattern also we can actually do price action. We can do price action through trend lines also. We can actually do the price action looking at the various patterns of the graphs of the charts also. So there are various ways. Okay, we'll be discussing one by one. Okay, to start with, we'll be discussing with respect to the candlestick patterns now. Okay. So we rely on the fact that the history tends to repeat itself. We have discussed this. Okay. So this is one of the most important assumptions in the technical analysis. Okay. So the candlesticks are used to identify the trading patterns. The pattern in turn help the technical analysts to set up the trade. Okay, so we are looking at some pattern in the candles. Okay, can we actually look some of the patterns as I told you? So I was actually writing something on the whiteboard. Okay, so I asked you this one. Okay, so this is one such candlestick pattern it is, and one more is this one. We already discussed this, and we also have something called as this, which we already discussed this, something like a cross. Okay, this also has some significance. Supposing that if this particular candlestick appears on the chart, if they're appearing on the chart, how to interpret what lies ahead? That is what we are discussing with respect to price action. Okay, in case of price action, we will not be using any indicators as such. Okay, so indicators we are not using it, and that is why it is actually going to be called as what clean trading. It is actually called as what clean trading, which means we are not using any sort of indicators, and we are not loading the technical charts with any of the indicators as such. Okay, so that is why it is actually called as what the clean trading it is. Okay, and one such clean trading is what the candlestick pattern trading is, one such clean trading, and it is part of the price action trading it is. Okay, so the patterns will be seen, and whenever it happens like this, it is price tend to, what is it, history try to repeat itself. That is what we'll be discussing. The patterns are formed by grouping two or more candlesticks in a certain sequence it is. So if you're going to use the candlesticks for the patterns, so you are going to take into consideration of only a single candlestick for that matter, or maybe sometimes you'll be taking into consideration of two candlesticks grouped into group them together, may be called as one such pattern, or instead of two or one, you may be thinking to go for grouping 3 candles, and you'd like to make a certain sequence, and you'd like to say that this is what is a pattern as such. It is all allowed, it is. Okay, so we'll be starting with a single candlestick as such to start with. Okay, so before that, we'll go for the assumptions which are specific to candlestick. These are not the assumptions of the technical analysis, but these are the assumptions of the candlestick, that is price action using candlesticks. What are they? So buy strength and sell the weakness. This is the first assumption. And next is be flexible with the patterns is the second assumption. And next is look for the prior trend. Okay, so these are the various things, and we'll discuss one by one. You can see the buy the strength and sell the weakness. We'll be discussing what is it now. And next we'll go for the flexible, and next for the clear trend. Okay, so buy strength and sell the weakness. What is this? The strength is represented by a bullish candle, and a weakness by a bearish candle. We have already known this, right? So if any candle is green, we have to understand that this is actually going to be what? It's a bullish candle. This, or the prices are actually going to go up. That is what is the essence of this. Now it is a red candle, and you can actually understand that the feelings and the sentiments of the market, general market, is actually going to be bearish one, and that is why it has been represented as red it is. Okay, so these are the very basics of it. We already discussed. Then we are going to go with the be flexible with the patterns it is, quantify and verify. So while the textbook definition of a pattern could state a certain criteria, there could be minor variation to the pattern owing to the market condition. Okay, so what has been defined in the textbook exactly, it has not been happening in the real life situation with respect to the candlesticks for that matter. We should be slightly flexible. Okay, we should be a bit flexible with respect to what we are actually looking at. Okay, so however, one needs to be flexible within the limits. That is what I'm trying to say. It is not that since I'm asking you to be flexible, okay, a doji cannot be looked as a dragonfly, is it doji or something of that sort. It is okay, and hence it is required to always quantify the flexibility as well. Okay, so what is this flexibility? We'll understand once we understand the first pattern. While discussing the pattern, I'll tell you what is flexibility is all about. So otherwise, I'll not be able to explain without writing anything on the whiteboard. Okay, so next is look for the prior trend. Okay, so what is this look for the prior trend is? If you are looking at a bullish pattern, the previous trend should be a bearish one. Likewise, if you're looking for a bearish pattern, the previous trend should be a bullish one. So what do you mean by this? Can you tell me? Can anybody throw some light on this particular point? Look for a prior trend is very important with respect to the price action analysis with respect to candlesticks. Yes, anybody can tell me what is this prior trend? Look for the prior trend.
Sir, here we might be looking for a reversal. Let's say if you are in a downtrend, we might be
Okay.
looking for an uptrend. So we need to see a reversal or a reversal candlestick pattern.
Okay. Yeah. Anybody else? Okay, so look at this graph, this what which I'm going to be writing it now. Okay, so assume that this is the uptrend continuously it is happening. Okay, so there is one candlestick which appears now. Okay, so what is that candlestick is? Assume that this is what is going to be appearing here. Okay, so assuming that this is actually a single candlestick pattern, it is a very big candle. It is red candle which has appeared. Okay, so now what can happen to this? So the trend was actually the prior trend was an uptrend. Then this particular candlestick has really formed now. Okay, and you're representing this particular candle as bearish. And it's a long bearish candle, very long it is. Okay, if it appeared, then what can you suspect the market to happen? Okay, so the markets can actually come down. Okay, it can actually come down. So just because there is a the red candle which appeared, okay, so that does not mean that it is actually going to be the market will be bearish. Okay, what is supposed to happen here is the prior trend should be uptrend. Uptrend means it should be an uptrend like this, and exactly one particular candlestick must have actually appeared like this, and then you can actually expect that the market tend to be collapsing. Okay, I'll again write one more. For example, instead of this, I'll write one more graph like this. Okay, so the markets, assuming that the markets are actually range bound like this. Okay, and there is one red candle which has appeared like this. Long red candle has appeared like this. If it appeared, what we have to look as per the theory, what we have to be looking at, we should look at the previous trend. What is the previous trend? It is no trend. The previous trend is no trend. It is consolidated. Market is in this sideways. Is neither an uptrend, neither an downtrend here. It is no trend. It is. So if this particular pattern happens like this, so can you say that the market is going to be collapsing?
No, sir.
We can't say, because the previous trend is not the uptrend it is, or not the downtrend as such. Okay, so here what has happened? The market was actually uptrend, and then the candlestick pattern appeared, and then based on that, what you have actually predicted is market is actually going to be correcting or coming down. So this is what we are actually looking at, actually called as what looking at the previous trend it is. Here the previous trend is no trend, and because of which we cannot expect this particular pattern to be working in this scenario. Okay, so now I'll go back to the slide. Okay, and just read this once again. If you are looking at a bullish pattern, the prior trend should be bearish. And likewise, if you are looking for the bearish pattern, because I was looking at a bearish pattern, right? and the peer trend should also be bullish. So it is bullish because we have seen that bullish pattern was there, and there was a bearish pattern which really appeared. Okay, so that is actually called as what? Looking for a peer trend. So what I'm trying to say here is you should look at the peer trend, okay, before confirming the pattern. It is the pattern will not be confirmed if there is no trend in the past. That is what I'm trying to say here. Okay, so price action with a single candlestick. Let us see now what is this single candlestick is all about. As the name suggests, a single candlestick pattern is formed by just one candle. It is okay. So as you can imagine, the trading signal is generated by a 1 day's trading action only. It is. You are taking into consideration of a single day, and you would like to say that what lies ahead. The trades based on a single candlestick pattern can be extremely profitable provided the pattern has been identified and executed correctly. Okay, so one need to pay some attention to the length of the candle while trading based on the candlestick pattern. So length of the candle is also equally important. It is not just length of the candle, is the body of the candle is very important here. Okay. In general, the longer the candle, the more intense is the buying or the selling activity, that we know it, right? So body should be longer. It is body of the candle should be longer. Okay, so higher the body of the candle, the higher the chances that that is actually going to be working out. So if the candles are short, it can be concluded that the trading action was not that great. We know that if it is just a short or a no bodied candle as such, right? So can you recognize the long short candles in this? So we have already seen this, right? So this is the chart which we are actually seeing. This is the bullish long candle, but there is a short candle like this also. You can see these are the short candles, and there is a long candle out here, and there is one more long candle out here, right? So we know that which is long candle and short candle. We know it already. So I'm just moving on now. So we were there on this chart. Okay, the Marubozu is the what the first candle which will be studying today. What is this Marubozu? The word Marubozu means bald in Japanese. Okay, so people who don't have hairs, okay, they are actually called as bald, right? Okay, so the Marubozu is a candlestick with no upper or the lower shadow as such. Okay, so you can see Marubozu is like this, where you can see there is no wick here. The shadow is missing here, right? So this is why it is actually called as bald, and this is called as what? Marubozu. What is Marubozu? Marubozu means bald, that is in the Japanese language, and these types of candles are actually without wicks. The candles without any shoulders, okay, upper or lower shoulder, or it is also called as upper or lower wicks, are actually not present. Okay, that is why these are actually called as what? The Marubozu candle. And this is the green Marubozu, and this is the red Marubozu. Okay, so why? How can you interpret this particular red Marubozu, for example? So this is the open price, and this is the close price, right? So close and low are the same, and the open and the high are the same. That is how we should be interpreting. If there is no wick means the open and the high prices are the same, and here the low and the closing prices are the same. Similarly, here if you ask me, the closing as well as the high price are the same, and open and the low prices are the same. That is why there is no wick which is actually visible here. Okay, and what is the interpretation of this will be now studying. Okay, Marubozu. So there are two types of Marubozu, red and bullish and the bearish. So this is the red one is bearish, and the green one is the bullish Marubozu, as you know it. So discussed previously, buy the strength and sell the weakness. Be flexible with the patterns. Look for the previous trend. We have to be we should be taking into consideration while only looking at the candlestick. These are not the assumptions of the technical analysis, but this is the assumptions of the candlesticks, as we already discussed. So Marubozu is the only candlestick pattern which violates the rule number 3, that is look for the previous trend, prior trend. So what we have discussed here is there should be a previous trend should be there, and then there is supposed to be the wick should be there. Assume that this is actually a Marubozu now. So I am just what is it? I am erasing the wicks here. So it is becoming now Marubozu. Okay. So it is in Marubozu, assuming that this is in Marubozu now. So even if there is no previous trend, since it's a Marubozu, you can expect the market to come down. Okay, this also holds good in case of Marubozu. This also holds good in Marubozu. Hope it is clear. That is why it is called as here. The Marubozu is the only candlestick pattern which violates the rule number 3, that is, look for the previous trend. Okay. So now we look at the bullish Marubozu now. So open is equal to low and open is equal to low and high is equal to close. We already discussed. That is why it is actually bullish Marubozu. It indicates that there is no much buying interest in the stock, that the market participants were willing to buy the stock at the very price at every price point during the day. The stock closed near its high point for the day. So it has opened. Once it has opened, what has happened? It went up, went up, went up. Okay, so and it closed there itself. Okay, which means there is no much variation, but market participants kept on buying the stock till the last point of the day. Okay, then only what is going to be happening is the Marubozu will actually happen. Okay, so what is the interpretation of Marubozu means? The market is actually going to be going upwards if it is a bullish Marubozu, if you're going to look at. If it is going to be a bearish Marubozu, then markets are actually going to be taking a downtrend. That is what we have actually discussed, right? It does not matter what the previous trend is. That is also we have discussed because it is going to violate the one of the rules of the assumptions of the candlestick pattern. That is also we have discussed. Next, coming with the sudden change in the sentiment, there is a surge or bullishness, and this bullish sentiment will continue over the next few trading sessions also. That is what is the meaning of this Marubozu. So what we can see is when there is a bullish Marubozu that can be seen, what happens is automatically there is going to be a sort of buying activity that is going to be taking place, which means markets will be bullish the moment you are going to look at the Marubozu. Whether the previous trend is going to be bearish or going to be bullish, that does not matter for the Marubozu. Okay, a trader should look at the buying opportunity with the occurrence of the bullish Marubozu. That is what is the very important aspect of it. The buy price should be around the close price of the Marubozu. Where you should buy? You should buy almost near to the closing price of the Marubozu. The closing price of the Marubozu, that should be your target for buying that particular stock. You can see here there is a Marubozu here. Okay, and but there is a wick here. You can see there is a lower wick here, a small lower wick. Can you see here? Okay, so as I told you, you have to actually not. You should not consider this lower wick because we should be slightly flexible. That is what I am trying to say, right? Understood what is flexible now? But this is not Marubozu for me because there is a wick, a substantial amount of wick is actually visible here. So because of which I mean just because I am flexible, I should not be considering this as an Marubozu. Okay, so hope it is clear now. So this is Marubozu for me.
Sir, could you please explain the buy part? Why should we bought at the, I mean, the previous, could you please turn the previous slide on?
I am unable to hear what you said, Mohsen. Can you please?
Sir, the previous slide, could you please go back to the previous slide?
Yeah, this is the previous slide.
So you said that the buy price should be around the close price of the Marubozu.
I'll explain it to you. That is why. I told you I'll be explaining. I have not explained it still.
Okay.
There's somebody speaking in between. Can you ask them to mute? Okay, so you can see here, this is the Marubozu. Assuming that this is the Marubozu, as we have said, we should be slightly flexible. So where we should buy, we know that whenever there is a Marubozu which happens, irrespective of the trend, whether it is in downtrend, uptrend, we should not be worried, at least for the Marubozu only. So where we should buy? We should buy at least near the near this particular close price. What is the close price here in this Marubozu? The close price here is this is what is the close price. The tip of this is the close price. Okay, assuming that this is the day chart. Okay, what we should be doing is, and next day when you come back and when you want to take up this, supposing today's closing, this has happened with respect to ITC. So how should I use this as a trading opportunity next day? Tomorrow when I come, okay, when I see this, okay, by today evening only I know this is formed now. So what should I do is tomorrow when I come back, okay, at 9:15 or maybe at 9 o'clock, what should I do is I should actually book a buy order slightly above this closing price. So I should actually book a buy order above this particular closing price. And what should be my stop loss? The stop loss should be the low of this low of the candle. Supposing the low of the candle is 100 rupees. My stop loss may be around 99 rupees and 75 paise will be my stop loss. That is what is my stop loss. And assuming that this is 103 is my close price, I should be buying at 103 rupees and 15 paise over and above that. So if I actually enter at that particular price point, there may be chances that actually the price actually can go up. Mohsin, hope you have understood what is this?
Yes, sir.
How to buy
Yes, sir.
this. So that is
Clear.
above this particular close price of the previous day, I should actually enter. And what should be my stop loss? Lesser than this body. Okay, lesser than this body will be my stop loss. Below this will be my stop loss, and above this will be my buying price. But you can ask me, sir, what will be the target? Okay, so for target, you can actually go use support and resistance level, because the candlestick pattern will never tell us what should be the target price. So we'll discuss in detail in the next session, that is in tomorrow's session, because it's already 4:01. So thank you so much for being with me, and we'll meet in the next session. Okay, take care.
Thank you, sir.
Bye.
Thank you, sir.
Yeah.
Thank you, sir.
Thank you.
Thank you.